All right, good afternoon. Welcome back here to Trader Money. Great to have you aboard. Let's get down to it. Let's go look at the challenge here, and then we'll talk about the real Santa Claus here in the market, what it means, and I'll show you some things that I'll be trading or am trading, and some expectations going forward. Here with the market into year end. Now, for the challenge, we have a position on Visa on the board right now. This thing has just not gone anywhere. We got in, and then we got in on the signal. It was a great signal, and then boom, we get the announcement that they're moving their headquarters, and that's tends not to be a game-changing announcement. But when you're in short-term options, a $2 drop that affects things, and has kind of just taken some of the air out of the upside here to it. So the stock isn't all that much lower than where it was when we got in, but the option has not performed here very well. So going to back out of Visa here, take my $400 loss and move on. So let's come in here. 260 is that? Let's go here. 260, 265. And again, this is just the time stop, the red time stop coming into play. So 261 was my exit price. So I'll note that as 260 here. And then today's trade close is 11:12 p.m. And boom, we are out. So, didn't do anything to really improve the challenge, position. Didn't do a whole lot to, make it a lot worse. We're still pretty much in the same position, a few hundred lower. But as far as affecting the next trades, it doesn't make it so we can put more on them. Doesn't make it so we can put less on them. So just another one where just nothing grabbing, no real traction, really grabbing here. And I know you probably hear a little frustration in my voice over it. And, it's been one of those things for years. I try not to express or show emotion or anything. But now that, decisions aren't made based on anything I think, they're based on the algorithm, I can express some of that. And yeah, it's been, a frustrating grind. I can look at it and say, well, you know what, for, only one stock hitting its price target, we're holding up really well. But, come on. Give us three or four that hit our price target, and let's hold up over $10,000 really well. That's what I'd much rather say. But we'll get there, and until then, keep on grinding. Now there are no new signals on the board here this morning, this afternoon. We saw Nike with an upside 3-7 cross on it here this morning, but did not trigger and is reversed. We saw it with Twilio as well. Twilio was up nicely this morning, went up, reached $100, and then news that WhatsApp is scaling back their usage of Twilio has sent the stock, down another leg here. And, it's one where I like it long term below 100, but I still have not been able to find a place to get in. I was looking at it this morning wondering, well, did I miss out? But I would not be surprised to see that kind of leg down here to about 88, 89 come into play here on Twilio. One upside crossover that has held is Starbucks, or at least, was holding Starbucks, but it is not a bullish trigger. The consolidation risk on it is just a little too high. I thought it might be enough to be in range, but not quite. You can see the 39.1 stochastics even still below 20 there. It's lower highs, lower lows, downward trend action. So for as much as I like Starbucks, and we talked about Starbucks last week, right? And just some of the fundamental elements and the pullback element here. It's just not something that I can go get into for the challenges. There is no trigger here on it. Now, there were no downside crossovers just a little bit ago. Let me see if the market move here has changed that. Yeah, we have a few coming into play. Target, Whirlpool, Las Vegas Sands, IBM, and American Airlines. Las Vegas Sands, not going to be a challenge trigger. IBM, no. And in fact, right now I'm running the challenge algorithm real quick again, just to see if anything has changed. But IBM, Las Vegas Sands, American Airlines, no chance. Target, Whirlpool, I saw them weakening earlier. Here's Target, and weakening down here. Let's see what Walmart's doing. The same thing, and then Whirlpool here, but none of those qualifying as a trigger. At least that was 10 minutes ago. I should have the scan up in 20 seconds. There it is. Yeah, nothing. No downside triggers there on any of those downside crossovers that we see coming in. So I'm going to go into the close here with cash. For the challenge, and we'll look to get aggressive and play the next signals that come into play. Now, middle of December every year, I inevitably get someone who asks me and says, "Hey Jeff, what do you think about the Santa Claus rally into year end? And you think Santa Claus is coming?" And Santa Claus, the fictional character and all of that, and for the 25th of December, and is there this idea that Santa Claus is going to bring gifts to investors? And anytime there's a rally in December, you go to any of the websites and they call it a Santa Claus rally, right? And what does it mean? What does it mean for traders? And does it really have any bearing? Well, yes, it means something, and it has a lot of bearing, but it's not what most people think. And it has nothing to do with the 15th of December or the 20th of December or the last week of December. And I know any rally at those time periods is going to be called the Santa Claus rally. And there's no kind of taking people out of that mode because, well, that's, it just that everyone has to have a reason for everything, right? So if the market goes up, let's blame Santa Claus. They're for it. But it's one where the Santa Claus rally is real. It just doesn't happen around Christmas. Let me show you what I mean. I'm just going to come into some seasonality charts. I'm going to put in the S&P, okay? And I'm going to put in the S&P over the last 10 years, okay? Over the last 10 years, the S&P has been up 9 out of 10 times in the month of November. 9 out of 10 times. Only April has that same track record. Now, it isn't the top performing month, right? It's not the top performing month. In fact, October and, what's really funny is February, top performing months. But, it almost always goes up in November. If we go back further in time to 20 years, well, it's 80% of the time. And let's face it, we had the Lehman crash going on one of those years, right? November up 80% of the time, more than any other month. And yes, the actual performance isn't as high as some of the other months, but we have seen some very big rallies in November out of the last 20 years, right? If we take out 2008, right, the Lehman crash, well, November looks even better, right? It looks even better. So it's one of those where, okay, that's a little early for Santa Claus, right? November. Let's see if there's anything else that kind of, plays into this. Let's look at some sectors. Let's look at the SMH, semiconductors, right? Let's go over the last 10 years. Semiconductors are up 80% of the time with an average gain of 2.7%. Only February has been better for semiconductors over the last 10 years. Over the last 20 years, semiconductors up 75% of the time with an average gain of 2%. Compare that to December. Not even close. November is way better than December. Okay, interesting. Well, let's go take a look at transports, right? Let's see Santa and his sleigh and all that. Well, over the last 10 years, transports have been up every single November except for one. And the average gain is 4.3%, which is more than double any other month. Well, not quite double February, but close. Transports in November have been phenomenal. Have they been all that great in December? Average loss of 0.7%. When Santa transported, in November. What about the last 20 years? IYT only goes back 17, but it's the same picture, right? It's the same picture. What about retail, right? Santa, retail, okay. Let's take a look. November or December? Over the last 10 years, November has a 3.7% average gain, up 70% of the time. Only February is better. And December, look how bad December is. December is, pretty much only August is worse for retail than December. Santa Claus rally, retail rally in December. No, it comes in November. It comes in November. All right, you say, well, the XRT, let's go take a look at the RTH, right? The other retail, ETF here. We're going to see the same thing. 10 years, the RTH up 100% of the time, average gain of almost 4%, which blows away any other month. Look at December. Pretty blah. Go back 19 years, as long as the ETF has existed, October, November have been the rally months. When's Santa coming for the market investors? We're not coming in December. It's coming in November. And we see that theme throughout sectors. We see it throughout, the entire market. And some sectors are stronger than others. Now, are there any individual stocks that are stronger than others, right? Well, let's take a look at UPS. Right? Santa Ships, right? Santa Ships UPS. November average gain 4.8%, up every single November for the last 10 years. Look at December. Average loss of 1.7%. Santa ships his packages in November. Over the last 20 years, it's up 90% of the time. Average gain of 4.9%. You take out the Lehman crash, and it's about the same. Right? So, when does Santa come? December, November? You're getting the point, right? The point here is very much the Santa Claus rally is not a December phenomena. It is a November phenomena. You can see with FedEx, November, the absolute best month for FedEx. Well, those make sense, right? Shipping, November, that's when a lot of the goods are shipped and whatnot that are going to be gifted in December. What about Honeywell? Honeywell, over the last 10 years in December, is up 100% of the time. Every single November for the last 10 years, average gain of 3.8%. Best month by far of the year for Honeywell. Honeywell, they make big machines, and they have that commercial now where they make the future, right? That's kind of their new tag, that they're making the future. The future looks bright in November and not so much in December, where the average gain is 0.5%. Let's take a stock that isn't so much loved by the street anymore, and that's IBM. IBM in the last 10 years in November, it's up 70% of the time. It's not its best month, but it's up 70% of the time. Over the last 20 years, it's up 65% of the time. Not too bad. It's not Honeywell, but still, it's not too bad there. We take out the Lehman crash, it looks even better. But look at the difference between November performance and December performance. You could go through, you don't need a membership to Stock Charts to come through this and to do exactly what I'm doing with any stock that you're curious about. Right? You can come in, you can put in J&J, you can look over the last 10 years, and you can say, well, J&J, okay, we don't see the same thing, right? And you'd be right. We don't see the same thing. It's not every stock, but I've showed you some of the better ones. The sectors, the semiconductor group, the retail group, and more specifically the transport group that tend to do really well in November. And you can come and see this. But how do you play it? Right? How do you play it? Well, we saw at the beginning of November, we saw big money come into the transports, right? They shot up. Here's FedEx right at the beginning of November. Yeah, we had some news, some ISM number that was a little bit better than expected, right? So that definitely assisted. But it's been pulling on back here of late. And so if you're looking from a bullish standpoint, you look at these pullbacks and say, okay, when is my opportunity to get in? Right? And you wait for, a nice little opportunity to get in. I've been watching the hourly chart here on FedEx, looking for an opportunity. Haven't found one yet. I was kind of wondering if 160, I might see a little turnaround. It might happen a little sooner. But, 160 is kind of the area I'm looking at. UPS, same concept, same principle. And just waiting for, a little bit of pullback to come in. And then looking to pick them up as the rest of the month, goes forward. But there's also this element of, all right, if you don't want to chase, if you're on the bearish side, right? If you're more on the bearish side, right, these are going to be some interesting rallies to short. We have a market that's up how much this year, right? We have a market that, let me just put the year performance here on it. Year to date and performance. Market's up 25% this year. Okay, 25%. One of the best years for the market. Up 25%. Think about being a fund manager going into year end. What are you doing? Right? What are you doing? We saw in September, we saw fund managers, many of them, really cut positions in a big way. Market was up 20% on the year. Fine, they may miss a little bit more of a rally. Their year looks really good. And yeah, we've seen some chasing back in because we do have fund managers that are lagging the market. Some of that has come in here of late. But as we get into December, right, there's this element of locking in the gains for the year, of selling for tax purposes to, get some of the gains, put onto this year rather than next year. And, we often will see on a big up year, we will see that December and January tend to be weak, where those are some of the profit-taking areas. And so, we saw in the seasonal charts there where, these stocks do really well in October, November, and then really fall off in December in terms of performance. And so if you're bearish, right, it's probably still a little bit early, but, to take a look and go, okay, you know what, Honeywell, you're a great company, you're doing really well, but, when are you going to have a pullback? Yeah, probably as we get into December. And I suspect that the market is in for a sizable pullback as we go into December of this year. And we haven't seen the metrics turn to reflect bearish or anything like that here just yet. But with the seasonal tendencies that we have, with the performance of the market this year, and with what fund manager incentives are going to be, barring some sort of, massive change in the trade war rhetoric or massive change in the Fed rhetoric, we're probably going to see a pretty decent pullback in December. And I suspect that will carry through into January and set up next year for a pretty interesting year, and a year that I do expect to go higher, and a year that I expect that many stocks will make some very big moves. But, just looking at what the comparables are going to be. But that's my expectation. So when I think about Santa Claus Rally, right, this isn't just something where we go and we look and say, well, you know what, the stock went up, it must be Santa Claus. No, there's some real seasonality here. There's some real data here over long periods of time to kind of show what's going on. And, we're seeing it play out even in a market that has a lot of, fears and worries, and it's something that we'll continue to, play out as we go forward. Thanks for hopping on. Have yourselves a fantastic evening, and we'll talk to you tomorrow morning. Take care.